Welcome to yet another episode of The Big Picture. Today we look at a couple of events, one in India and a set of events in the US. First and foremost on our mind today is the Supreme Court of India's decision on Tiger Global's appeal for tax relief pertaining to their sale of shares in FlipKart through a holding company in Singapore. While the Authority for Advance Ruling AAR imposed the tax, said that the tax is applicable, an appeal to the High Court overturned that decision. And Supreme Court overturned the decision of the High Court and said Tiger Global is liable to pay taxes, even though the company shares that were in question was a company in Singapore, whereas the court ruled that the assets are Indian. What happened here is a complete U-turn of Supreme Court's own decision in 2012 on Vodafone case, where it protected the investor. Whereas in this case, the Supreme Court seemed to have seen the substance and said that a tax resident certificate or TRC, which was good enough to claim exemptions or such reliefs in the past, is not the only factor, and looked at who is making the decision and who is the beneficiary of decision and whatnot. Essentially, every private equity investor would be worried now. Many of the private equity firms, many of the private investments, after the Vodafone judgment, many of these investors, they restructured their operation in such a way that a holding company was created outside India, so that in the event of a transaction, they could exit without paying taxes in India. Now that is no more applicable. If the courts and the tax authorities are going to look at substance over form, this could create havoc in the private equity ecosystem. What does it mean for private equity exits? My read is we are going to be looking at more IPOs as the preferred route of exit, given for multiple reasons. One reason being taxation, and another reason being the flows that Indian markets have seen from the domestic retail investors. With such high flows, selling out in an IPO or exiting through an IPO is far better than a strategic sale of a holding company in a different country. So it's a much cleaner structure. What it means for markets is we are going to probably see a lot more listings, which means a lot more supply of equity in Indian markets. Slightly moving away from home, actually moving far away from home, we noticed a set of actions in the US. The first one was when President Trump declared that he is considering, or rather mentioned that he is considering a ban on investments by institutions in single home residences. As a response to that, some of the companies, some of the asset managers who invest in these kind of properties took a beating. On the next day, President Trump announced that he wants to ban defense companies to reduce, or rather stop buybacks and stop repurchase of shares and stop paying the kind of dividends that they have been paying, as well as executive compensation on defense companies. His rules was that these companies should be investing in creating capacities in the US to make America great again. So essentially this questions a couple of things. So US has adopted free market capitalism. We all know US as a free market. We all know US, or rather, and US has been trying to export this model of capitalism to the rest of the world, including and India has adapted to this fairly well. But US seems to be questioning in its home the efficacy or the effectiveness of this economic model. Is it a complete change in the US? We don't know, but it is definitely not surprising, or rather a bit more it makes everybody anxious in the sense that the US government wants to supersede the powers of shareholders in declaring dividends or buybacks or whatnots. And the third thing that happened in the US was the attack on the Fed. While there seems to be a matter that is sub judice, in the sense that there is a case pending in the courts of US where there is a claim or an allegation that Fed Reserve spent significant amounts of money in maintenance or upliftment or modernization of their offices, the sudden pressure being brought about on Fed has been quite surprising. And US President has not shied away from asking the US Fed to reduce interest rates to support growth. If any of these events, if any or all of these events have happened in any of the emerging markets, most commentators would have been fast to jump into that and question the motives of the government. Now, a similar thing happened in India too, early 2014-15, when the new government came into being. The government was also of the view that the interest rates are much higher and should be brought down, which was not liked by most commentators in India, where said this is questioning the independence of the central bank. There seems to be some kind of different yardsticks being applied for free markets or the independence of the central bank. Does it augur well for markets in the long run? Does it augur well for a developed market like US in the long run? We wouldn't know. These both the issues, the Supreme Court judgment in India, as well as the way PoTUS is trying to control companies and their actions, is something that we will continue to watch. Thank you. We will see you on another episode of Big Picture soon.
Investment in securities market is subject to market risks. Read all the related documents carefully before investing.